Kodili, a good morning to you, and thank you very much for joining us via Skype.
Good morning, listen.
Okay. Does these numbers from crude oil and agri-commodities put some smiles on your face as an analyst?
Well, yeah, sort of, because if you compare the current oil price to the benchmark, the budget benchmark, we have about a headroom of 28%. So we expect that soon we should start to see a section of that in our FAC allocation. And then if that happens, then hopefully some salary areas will get paid. And it will also reduce the pressure on the Naira and also slow depletion of external reserves. So yes, it's good news for us.
Okay, well, this is good news. But we all know that significantly the dollar weakening is a major contributor to this gentle rally that we are seeing, isn't it?
Yes. Yes, this has to do with the U.S. data released yesterday, this week, about employment. And, it came down lower than people expected, like private employment came down to 169,000 from 175 in the previous month. Meanwhile, people expected 200,000, so it's kind of reduced the demand for the currency. I guess it depends on what happens next. Usually when this happens, demand comes down that day of the news, and later it starts to stabilize. So you might see commodity prices, especially agri, going back downwards later if the dollar strengthens.
Well, let's stick with the crude oil story a little bit. Do you foresee $70 a barrel? We're now at the doorstep of that figure.
I don't know. It's difficult to tell because there are several things now like we expect to happen, and it depends on which one plays out. Like I said the last time, you have the Iran nuclear deal, you have the Saudi Yemen crisis, then there's the crude stockpiles coming down, looking that the recount is going to have an effect on production. But on the other hand, you have Saudi Arabia and Iraq still increasing production, and so the supply glut is still in the market. So depends on which one. I don't know about 70. It's possible. It's at 68 now, so it's possible.
Okay. Let's talk a little bit about. Let's move on to agriculture. These supply concerns from Ghana, the world's, I guess that will be the second largest cocoa producer, the number one, as it were, pushing cocoa prices significantly higher. Nigeria is also a major cocoa exporter, isn't it?
Yes.
Yes. So how do we benefit from this rally? Yes, I know we'll make some income, some headroom there for Nigeria as well.
Yes, we should. We should. But like I said, these prices they are really volatile at this moment now. I mean, we still have large stockpiles from. So I said 2011 because of higher prices and it encouraged a lot of farmers to plant. So even though in the short term there are some factors that are pushing it upwards, in the longer term it might not remain so. So it depends on which one doing that. So in the meantime, I mean it's good for us because of our export revenues, but don't know how long it's going to last.
Speaking, we shouldn't rule out the drums, as it were, for either Nigeria. I'm talking about Nigeria now, about on crude oil price rally and agri-commodities price trending higher as well. It's not yet time to rule out the drums.
Sorry, I didn't get you.
I said, is it time to start a party and say, well, we can go and we can sleep with two eyes closed? Because oil price is getting higher and agri-commodities are also getting better. Should we?
No, of course not. It's not time because we have the a headroom of 28%. I mean, we have a lot to do, rather the income administration have a lot to do apart from salary areas. We also have the infrastructure gap, and then there's so much to do. So no, it's not time to sleep here.
It's no time to sleep with two eyes closed. Give us a sense of where the rest of the week will look like for these two markets you cover for us here on Channels Television Business Morning.
Okay, for oil prices, we expect it to keep on trending around the base levels. I don't expect it to go below 65. That's for Brent oil. For agri commodities, I think the dollar will start stabilizing, so we might see some of these gains reduce. So it might turn negative by the next time I'm speaking to you. Not what I expect.
Okay, let's leave it there at the moment for today. We appreciate your time, Kodili Nduka, analyst at Financial Derivatives Economic Research Unit. Do have a wonderful day ahead.
Thank you.
Okay, we appreciate that.